So in this video, I want to talk about why I prefer selling options versus buying options. So my first argument to why selling options is better than buying options is we know that options is basically insurance on stock. A put option is an insurance against the stock going down. A call option is an insurance against the stock going up. So if it's an insurance, and if we compare it to the insurance company, if we take the analogy with an insurance company, who makes money with the insurance company? Is it the insurance company that makes money, or is it all the people paying for the premiums every month? Let's say a car insurance company. So the people protecting their cars paying premiums every month, are they the ones making money, or is it the insurance company at the end that makes money? Yes, sometimes the insurance company will have to pay for an accident, but overall, across all their policies, the insurance company is the one making money, collecting all the premiums every month. The individual payer of the premium, the individual buyer of the car insurance premium, is basically just protecting themselves from a car accident. So basically they're paying for peace of mind. The only time they make money is if they actually get into an accident and the accident costs way more than what they've been paying in premiums all this time. But even if that happens, their premiums will go up afterwards. So the insurance company is still protecting themselves, making sure that the premiums they collect from every person is enough to pay for a potential car accident claim. That's why your premiums vary depending on your gender, your age, where you live, the type of car you drive, so many factors. So it's all based on statistics. And that's how they cover themselves. They make sure that they collect enough premiums to cover themselves eventuality of having to pay for a car accident. So we can make that same analogy with selling options on stocks. But before getting into selling options, I just want to talk about how you make money with buying options. So let's say a stock is trading at 100 and you buy the 110 call and you pay $2 for it. You paid $2. So the only way you make money is that the stock has to do something. It has to go up within a certain time period by a certain amount for you to make money. So you have to get the direction right. You have to get the movement right, the amount of movement right, and you have to get the time frame right for you to make money when you buy options. So the stock needs to trade above 112, which is your strike plus the premium paid, for you to start making money, for you to break even. If the stock moves quickly at the beginning, your $2 premium will increase in value. But in theory, the stock needs to be above 112 in this example for you to start making money. Same thing on the put side. If the stock's trading at 100, you buy the 90 strike, let's say with 2 weeks of expiry, and you pay $2 for that put. For you to make money, the stock needs to drop quickly at the beginning. If it doesn't drop quickly, on expiry, it needs to be below 88, which is 90 minus $2. It needs to be below 88 for you to start making money. So let's say you do get the direction right, the stock is at 70. Yes, you'll be happy, you made a lot of money. But what are the chances of that happening? And what are the chances of repeating it consistently on purpose every time? So that's the problem with buying options is, yes, the profit potential is crazier, but the chances of that profit to occur is harder, is much smaller. But if you sell options, so same example, stock is trading at 100, you sell the 110 call and you collect $2. For you to make money, all you need is for the stock to stay anywhere below 110 by expiry. So the stock could go from 109 to $5. You'll win on this trade. So you've got a larger room to make money. You've got a better chance to make money. Yes, it's a smaller amount, but at least it's a known amount. There are no surprises, and it's more consistent. You could repeat it. You're doing it on purpose. Every time you place a trade, you know that you have this much chance of making this much money. Same thing on the put side. Stock's trading at 100, you sell the 90 put, collect $2. All you need now for you to win is for that stock to stay anywhere above 90 and you make money. The stock could drop, so you can get the direction wrong. So you don't know where the stock's going. It could go up, it could go down, and you could still make money because you sold the 90 strike. So you've got room for the stock to drop 10 points and you still make money. So that's one big benefit for me for selling options, is that I don't have to guess the direction. I don't have to get the direction right. I could be wrong a bit and I could still make money. Obviously, it'll be better if I sell, for example, the put, then I want the stock to start moving up. But even if it doesn't move, just time goes by, and if it drops a little bit, I could still make money. And another reason I like selling options is that the probabilities are given to you. You know, by the broker, you know what are the chances that this stock is going to be breached by expiry. It's given to you. So every time you place a trade, you could choose what level of risk you want to take. Do you want to trade that has an 80% chance of winning and collects less premium, or do you want to trade that has 60% chance of winning but you collect more premium? So that's up to your risk tolerance. And like the insurance company that's covering lots of people, they're not just covering one person, because that's a big risk. If that one person gets into a car accident, then their business is gone. But by covering lots of people, even if one person has a car accident, they've collected enough premiums from all the other people to make sure that they're still profitable at the end. So same thing with stocks. You can sell options on many different underlyings to make sure that if one stock goes against you, well, at least the other ones don't, unless we go through a black swan event like March 2020. But even in March 2020, yes, everything did drop, but some stocks didn't drop as much as the others, like Costco and Netflix. They didn't drop as much as all the other stocks. They didn't drop as much as the S&P 500. And another thing I like about selling options is, let's say I sold, if we go back to that $100 stock and I sell the 90 put, I collect $2. Let's say that on that expiry, it just happened that the stock dropped below 90. Well, I don't have to necessarily take the loss. I can actually roll my trade. I could buy back this option for a loss, but then sell it again further out at a different expiry, giving myself a chance for this trade to win without actually booking a loss. So initially I sold the put option for $2, and let's say the stock drops to $85. Then I'm going to have to buy that $2 option. I'm going to have to buy it for $5. But I can sell that same 90 put 2 weeks later. I could sell it for maybe $6. So now I collected $2, and then I collected another $1, which is the net credit from buying it back for $5, selling it for $6. So now I've collected another $1. So now I've collected a total of $3, same strike. And now I'm just waiting for the stock to come back up above 90. So I could keep rolling and waiting for the trade to become a winner. So that's a management style of selling options. But if you buy options and the trade doesn't go in your favor, there's really nothing you could do. So if you bought that 90 put option for $2 and the stock goes up or doesn't go below 90, your $2 becomes zero. What do you do now? You've lost $2. All you could do is most likely going to end up doing is buying another one, hoping for the next one to be a winner. You might be increasing your losses, compounding your losses. So what's great about selling options is that even if in the rare scenario where your trade goes against you, there are ways to manage it so that you could still end up winning on the trade in the future. So that's why I prefer selling options, because it's, even though the income generated, it will not be the same every week or every month, but the ability to generate some sort of income every month, that's consistent. I'm placing trades on purpose. I know that I'm going in with a certain percentage of winning, and I know how much I'm collecting up front. And I don't have to guess direction. I don't have to be specific on direction. I just need the stock to stay within a certain range and I can make money. So what sounds better than that? Now, it doesn't mean buying options is completely not a good idea. I mean, if you had bought a call option in March when everything dropped and you bought a call option maybe 6 months expiry, you probably made 5 times your investment. But on a consistent basis, on a weekly or monthly basis, it's hard to make money buying options because you really have to be very specific with your direction, your timing, and the amount of movement. And when you sell options, you can play both sides. You could sell puts if you think the stock is going to go up, and you still have room to be wrong and still make money because the stock could drop a little bit if you're selling an out of the money put. And if you think the stock's going to drop, you can sell a call as well. So there are ways to play both directions when you sell options. You could be neutral. You could think that the stock is not going to move at all. You could sell both sides. I personally prefer to sell one side at a time because it gives me a better advantage, a better edge. I have a better chance of winning. When I sell both sides, I feel like I'm adding 2 restrictions. I'm adding 2 conditions to win. So I'd rather just sell one side at a time so that I just have one condition to win. And there are option strategies actually to protect you against a trade that goes against you. For example, imagine a car insurance company that collects premiums from the client, but then goes out and buys insurance for itself against a disaster. As long as they collect more from the client and pay less on their own insurance, then they're making money. So you could do that with options. For example, if we look at the $100 stock, if we sell the 90 put for $2 and then buy the 88 put for $1, well, I collected $2, I paid $1, so I'm left with $1. I've got a $1 credit. So now I'll make $1 if the stock stays above 90. But if anything happens, if anything crazy happens and the stock drops to 70, well, I don't lose all that amount. I only lose the difference between 90 and 88 minus the credit that I collected. So I only lose $1. So there are ways to buy reinsurance in your option selling strategy to protect yourself. I'm not going to get into all the different strategies of selling options, but that's what's beautiful about it, is that you've got way more ways to generate a consistent income every month. And more importantly, something that you could do on purpose and something that you can repeat. Because the traditional way of making money on the stock market is you buy a stock, you wait for the stock to drop, you buy it, and then you wait for the stock to go up to sell it. But if you do that, if you rely on that, you're basically waiting for opportunities. You're waiting for stocks to drop. And who's to say that when you buy it, it doesn't continue dropping? Maybe it continues dropping, maybe it stays at the same price for a while. So then you have to wait. So you're not generating that income every week or every month like you want to. But with selling options, you don't care what the market conditions are. You don't care if Tesla's at 500 or 600 or 300. Tesla could be at 600 and I could still make money with Tesla. How? I could sell a put on Tesla at 550, for example. So as long as Tesla stays above 550 for the next week, I collect money. If Tesla's running up to 700, I could sell an 800 call on Tesla, for example. It's a little risky, but I could sell a call on Tesla at 800 strike, collect money. As long as Tesla stays below 800 within a certain period, I make money. I don't need the stock to move a certain direction for me to actually make money. I just need it to stay within a certain range, regardless where the stock is trading at. I can adapt my range where the stock is trading at. So that's what's beautiful, is that I'm not at the mercy of the market conditions. Every week I can go in and find a trade that will generate income for me. All right, so that's why I prefer selling options versus buying options. So if you have any questions, leave in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market or even sell options, use my referral link below to get $50 in free commissions. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.